There are 4 steps that any trader can take to achieve consistent profitability. I've been finding myself repeating myself in discussion with 12-week program students recently, this framework. I'm repeating it over and over, and I'm constantly sending them back to this particular framework and helping them pinpoint where in the 4 steps they are and how they can ultimately go to the next step and achieve all 4 steps in order to achieve consistent profitability. You know, all the traders I've worked with on a one-to-one basis over the last few years, those that are highly successful and consistently profitable traders have directly or indirectly followed these 4 steps, whether they know it or not, and they've implemented these 4 steps into their trading because each of them are paramount in order to achieve consistent profitability and ultimately sustain that into the long run. So what I want to do in this particular masterclass, in this lecture, is run through each of those 4 steps and also give you some practical applications, practical action steps you can immediately implement in order to ensure that you've actioned these 4 steps and you're on your way to achieving consistent profitability. You know, some of you may be closer to consistent profits and consistent profitability, closer to it than what you may think. And it's potentially implementing 1 or 2 of these steps that ultimately help you achieve it. So I'm incredibly excited to share this with you. I know it's going to be useful. I know it's going to be very action-based and action-packed, so you're going to get value from it. So without further ado, let's dive into this particular masterclass on the 4 steps of achieving consistent profitability. Now, the big problem we're addressing here is that a lot of traders, they go a long way, but they go the wrong way. Meaning that they're working so diligently and so hard. And you know, with traders, I haven't really seen an issue with work ethic. And it's great, a lot of traders are willing to put the hours in. But there's no point putting an enormous amount of hours in if you're working on the wrong work. You can go a long way, but you can go the wrong way. So what I want to do with this video is provide that framework of what exactly you should focus on. And maybe you've already done a few of these components, and if so, great. What haven't you done? And what can you focus on to ensure that every single hour of work you put in on your trading journey, you're getting the greatest return on investment? Because you don't want to be putting a lot of time and energy into things that ultimately render themselves useless. You want to be making sure that you're diligent in identifying what the highest priority piece of work you can do is, and just going at that and making sure you accomplish it. So a lot of traders are oftentimes rushing the process. They're skipping certain steps. And sometimes what I've seen as well is they put a lot of work in doing a lot of back testing, 8 hours of back testing in some cases, to justify and to oftentimes cover up and to make themselves feel better about, you know, how much work they're putting into their journey. And sometimes it becomes a little bit of a social signaling thing of, oh, I did 8 hours of back testing, or I did 6 hours of back testing. And okay, but ultimately what you want is results. And sometimes doing 6 hours or 8 hours of back testing isn't necessarily the right thing to do. So a lot of traders are rushing the process, and they're oftentimes skipping one or more of these 4 steps. And as a result, they're building an incredibly poor foundation. And as a result, they're not achieving consistent profitability, or at least they're not achieving consistent profitability that lasts. Because some traders can have really great months, maybe 1, 2, 3 months of great results, but those results don't last over the long term. So by implementing these 4 steps that I'm going to run through next, you're building the strongest possible foundation, and you're going to build consistent profitability on a foundation that's sustainable and that often lasts. And that means you can get your funded accounts, and you can scale those funded accounts, and you can sustain those funded accounts into the long run. Okay, so the understanding here of the 4 steps to consistent profitability is incredibly important. We're going to run through each of the steps now, and then we're going to jump in the next little bit into high priority actions that you can actually implement. Now, the first part of achieving consistent profitability is you need to discover your edge. You need to truly find an edge in the market. I've worked with some traders, and oftentimes the question they go back to, because they're highly emotional in the market, is, do you have an edge? Are you sure that your edge actually works? Have you proven that? Have you not only proven your edge, but have you tried to disprove your edge and you found where your edge is vulnerable so that you're aware of those components. And do you truly have a profitable strategy, or are you just trading something because someone told you to trade it? Or are you just trading something because you think it's profitable? Okay, so this is really step number one, and you don't want to go past step number one until you're certain, because again, you can go a long way, but the wrong way, and you don't want to build a trading system on an edge that doesn't even work, because you're going to put so many hours in, and ultimately you're putting hours into something that doesn't work. So hopefully this video as well, this particular lecture, I'm stopping you and making you think, does your edge actually work? Do you truly have a profitable strategy? Are you sure? Are you certain that you have that profitable strategy? Because sometimes we can justify why we think our strategy is profitable, but until we have proven data in the market to prove that our strategy works more than it doesn't, and we can see through previous data in the market that we have a profitable edge based on future data, that's the most you can ask for a trader. So until you have that, you don't have certainty that you have a proven edge. Now, just because it's happened in the past doesn't guarantee it's going to happen in the future, but as traders, that's the most we could do. We can prove an edge based on previous data, and then we can put that into a trading plan, and then we could go off and execute on that consistently, and ultimately that's what's going to yield us consistent profitability. So step number one here is making sure you discover your edge. And I use the word your specifically because you want to make sure that the strategy you trade is in alignment with your lifestyle, and it's in alignment with the way you like to trade, and it works for you. If you're working a 9-to-5 job, a highly active scalping strategy probably isn't the best option. If you're a full-time day trader and you like to be more active in the market, a long-term swing style may not be your primary strategy. So it's about discovering an edge, but it's also about discovering your edge, the edge that works for you based on what you love and your risk tolerances and your lifestyle, etc., etc. So let's pay attention to that. Step number one is make sure you discover your edge, make sure it's actually profitable based on previous data, and then move on to step number two. The second step of consistent profitability is now taking the edge you've discovered and creating a mechanical trading plan based on that edge. Meaning that you've identified an edge in the market where you know that this particular setup is going to work more times than not. Now, what you have to do is you have to put yourself in the best possible position to go off and replicate that edge day in and day out. And the way you do that is by taking the components of that edge and putting it into a trading plan that allows you to step by step follow these steps. Step number one, look for this. Step number two, look for this. Step number three, look for this. If each of those components are there, take the position with this amount of risk. Once you're in the position, if this happens, do this. If this happens, do this. Managing your position until you're either taken out for profit or taken out for a loss. So what you're doing now in step number two is you're taking the edge you're certain in, you know that works, and you're creating a trading plan based on that edge. You're creating a system that allows you to step by step follow that trading plan and go off and execute in the market. Okay? Now that trading plan has to be mechanical. It has to have as little moving parts as possible. Why? Because once you've discovered your edge, it's variance from your edge that's ultimately going to disrupt your consistent profitability. Think about it. If you know you have an edge, your job now is to come to the market and execute on that edge time in, time again. The more you deviate from that edge, the less consistent profitability you're going to have. So if you have a lot of moving parts and moving variables in your mechanical trading plan, in your trading plan, then you're going to increase the probability of going away from your edge. The trading plan should be strict. It should be mechanical. It should be black and white, because that's going to increase the probability of actually executing your edge. Now, every time you take a position that isn't in alignment with that edge you've discovered, you're gambling, you're not trading. So make sure you have a trading plan. Make sure it's mechanical. Make sure it allows you to come back to the market and actually execute on what that edge that you've discovered is. And if you're not doing that, you're gambling. And that's the fine line. If you're a trader, a consistently profitable trader, you're executing on an edge every time you come to the market, every time you put risk on in the market. If you're not executing on a trading plan, or you don't have a trading plan, or if you're not sticking to strict rules, and having risk management there, you're a gambler. And it's the traders that learn to constrain themselves that are most successful. Okay, that's really important. When you've constrained your trading plan to follow a strict set of rules, and you've constrained yourself, those are the traders that are most free and most successful. But it's those traders that don't constrain themselves with the rules and with guidelines, and that come into the market, they're oftentimes constrained by the market. And that doesn't oftentimes work out well. So step number 2 is create a mechanical trading plan based on the edge you've discovered. Step number 3. Now, once you've had these steps work in chronological order, so once you've discovered your edge and once you've put that into a clear mechanical trading plan, the 2 things that are going to stop you from executing on that edge and executing on that mechanical trading plan are fear and greed. That's it. Because if you come to the market with your edge, with your trading plan, and the market's presented an opportunity, you look at your trading plan and your trading plan says that's your edge. Think about it. The 2 things are going to stop you are the fear of losing in that moment or the greed of wanting more in that moment. Those are the 2 things that are going to pull you away from your trading plan. They're going to pull you, you're going to oscillate into fear or into greed. And it's fear and greed that are going to take away from consistent profitability, because in order to have consistent profitability, you have to consistently execute on the mechanical trading plan, which is your edge, and it's fear and greed that are going to take you away from that trading plan. So it's fear and greed that are going to take away from consistent profitability. So I talk about this idea of removing variance from your decision making. Variance is the fear and greed that pops into your head just before you're about to take a position that you know is your edge. So step number 3 here is about learning to manage fear and greed. I teach this in week 5 in my 12-week program. I give you something to do before you take a trade and something to do after you take a trade to ensure you've managed fear and greed. This is probably the most important step. After you've got an edge and you've got a clear mechanical trading plan, this is the most important step. Okay, and this is where mindset becomes incredibly important as a trader. Understand that mindset isn't necessarily important before you have a trading plan, because if you don't have a trading plan, you're a gambler anyway. So what's important is to find an edge first, find a strategy that works, create a trading plan that works, and it's mechanical. Then trading becomes all about mindset. And this is where mindset's so important. This is where I come in. This is where I teach you on learning how to manage your expectations before you get into a trade and learning to neutralize fear and greed, pride and shame as a trader afterwards, so that you're not perceiving yourself above or below the market. You're perceiving yourself level with the market, so you're not in a state of pride or shame, and as a result, fear and greed. You're in a state of being poised and present with the market, listening to the market, not above or below the market, okay? Step number 4 here is execute when the market presents an opportunity. Now, how do you know what to execute on, where to execute, how to do it, and how can you be in a balanced state of mind while doing so? Step 3, step 2, and step 1. If you work through each of these steps in order, you've discovered your edge, you've created a mechanical trading plan that covers your entry, exit, and risk, and you've managed fear and greed prior to every single trade you've taken, and after every trade you've taken, you've removed the variance in your psychology, fear and greed. When the market presents an opportunity, you just execute. And this is where consistent profitability comes in. Consistent profitability comes in once you've done step 1, 2, 3, and the market now presents opportunities and you execute consistently. Every time the market presents an opportunity, you execute. And that's what trading becomes about. It becomes about consistently waiting and being patient for when the market presents an opportunity and executing when the market presents that opportunity. But you can't get to that stage as a trader unless you've done step 1, step 2, and step 3. Because if you don't have those steps in place, you're going to have so many issues: over trading, under trading, missing positions, FOMO. All those trading mindset issues, fear and greed, are a side effect of not doing these 4 steps. And I guarantee you, when a trader puts in place each of these steps and then they learn to manage fear and greed, they don't have any of those other symptoms. They're just patient, present, and they execute when the market presents an opportunity. Okay, so here are a few things you can do to apply these principles. Step number one, scrutinize the edge you currently have. Make sure it's profitable. It's very easy to come to the market with confirmation bias and go through backtested data and say, my edge worked here, my edge worked here, my edge worked here. And what you're doing is you're confirming your edge, right? You're using confirmation bias to confirm why your edge continues to work. But what you need to do is you need to go back to the market and you need to scrutinize your edge and find where it doesn't work. So you're aware of the vulnerabilities of your edge. And as long as your edge is profitable more times than it's not, that's great. That's the most important thing. But make sure you're actually scrutinizing your edge over previous data and you make sure there is actually an edge there and it actually works. If you have software or you've got a Monte Carlo, whatever, use those things as well. They're great. But step number one is make sure you truly have an edge. Then construct your trading plan, entry, exit, risk management. Those are really the things you need in a trading plan. You need to know where you're getting in, where you're getting out, and how much you're risking. And then manage your expectations prior to every trade. This is really, really important. You need to use the Bulletproof Your Mindset tool to be aware of what type of decision am I making. Am I making an outcome-based decision that's run by fear and greed, or am I making a process-based decision that's in alignment with my trading plan? And then you need to jump into the 12-week program and learn the principle I teach in week 5 to neutralize pride and shame. Because if you're in a state of pride in the market, you're going to put yourself above the market and you're not going to listen to the market. You're not going to listen to your trading plan. You're going to think you know better and you're going to project onto the market. The market's never wrong, so you're going to get humbled. And if you're in a state of shame below the market, when the market presents an opportunity, you're going to be too fearful to act and you're not going to execute on your edge. And in both those stages, you're not going to have consistent profitability. Your edge is going to be disrupted. But if you've learned to manage those two emotional states and you know when you're in a state of shame, you can use that and you can get yourself back to a state of being balanced. And when you're in a state of pride, you can get yourself back to being a state of balance like I teach in the 12-week program. Then every time you come to the market, you're going to be level with the market, listening to what the market's communicating and executing when the market presents an opportunity. And that's what it's all about. Okay, so implement these 4 steps. And I guarantee the moment you do, you're on your way to consistent profitability. And then it just becomes a game of being patient and executing when the market presents an opportunity. Okay? Now, I've got a very exciting opportunity for each of you guys as well. I launched a new completely free Trading Mindset Mastery Domination email series. So if you want to get daily or every second day, I'm not exactly sure how often I'm going to do it, but it's going to be quite frequent. I'm going to send you a list of highly actionable things you can do to master your trading mindset, to dominate in the markets. There's a link in the description. Sign up for that. It's completely free, and you'll be receiving frequent emails from me on actionable things you can actually do to dominate your trading mindset and to really level that up. Okay, so the link will be in the description or in the first comment. Check that out if you're interested in that. And you're going to be getting some actionable jam-packed things to do to master your trading mindset in your emails. It's going to be actionable steps, things you can follow and actually get results with. But I want to thank you for watching to the end and listening to my croaky voice. But I hope you enjoyed this. Hope you got some actionable insights from this particular video. I hope you stick to the framework and implement it. And I look forward to seeing you all in the next video. Cheers.